Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy stocks. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're looking at 3 stocks that come in with strong buy ratings with plenty of ratings from 5-star analysts. So we're going to take a look at these companies, what it is that they do, and what these analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's get right into these 3 stocks. First up is a company called LIVN. Trading under the ticker LIVN, their stock is currently priced right about $82 per share. LIVN is a global medical technology company. Their focus is transforming lives with products and therapies for the head and heart. They focus on advanced circulatory support for people in emergency cardiac or respiratory situations, cardiopulmonary for people who need short or long-term perfusion support, difficult to treat depression, drug-resistant epilepsy for those whose epilepsy cannot be controlled using medication alone, heart failure for people whose hearts can't pump enough blood, and obstructive sleep apnea for people whose airflow decreases during sleep. They are a billion-dollar focused medical innovator. They currently employ approximately 3,000 employees worldwide, 10% of whom are engineers, scientists, and medical professionals, and they have cardiovascular procedures and neuromodulation across 100+ countries. LIVN shared their third quarter earnings report back on November 3rd. They had net sales of $253.2 million, which was a 5% increase, and their adjusted earnings per share came in at 68 cents, well ahead of the analyst expectations of 45 cents per share. They also reaffirmed their fiscal year 2021 guidance, forecasting worldwide net sales growth between 8 to 11%, diluted adjusted earnings per share of $2 to $2.10, and adjusted free cash flow from $55 to $75 million. One analyst weighing in on the stock following their recent Investors Day presentation is 5-star analyst Adam Maeder from Piper Sandler. He said that the company's updated financial long-range plan was better than expected as its management affirmed its fiscal 2021 financial guidance and signaled that it was comfortable with where the street sits for fiscal 2022. Maeder added that LIVN's neuromodulation pipeline continues to track in line with previous guideposts in terms of its key initiatives, and he calls the stock his favorite idea heading into next year. Adam is one of 6 analysts that currently has a rating on the stock, and it does come in as a strong buy based on 5 buy ratings and 1 hold. The average price target comes in at $107 per share, which would be an upside potential just over 30% for this next year. Taking a look at our detailed list of analyst forecasts, on the low end we do have that hold rating from last month, which would still have an upside potential of over 16%. On the high end we have a $120 price target, and that would be a 46% growth potential. Second on our list we have the #1 customer relationship management or CRM platform with Salesforce. Trading under the ticker CRM, their stock is priced at $266.50 per share. Their cloud-based CRM applications for sales, service, marketing, and more don't require IT experts to set up or manage. You simply have to log in and start connecting to customers in a whole new way. More than 150,000 companies use the Salesforce CRM to help grow their business by strengthening customer relationships. Their customers see about a 36% increase in sales productivity and 26% more deals. Salesforce has been the #1 CRM software provider worldwide by revenue for 8 consecutive years and has consistently delivered durable revenue growth. Salesforce shared their third quarter earnings report on November 30th. They saw revenue of $6.86 billion, which was up 27% year over year. Their earnings per share came in at $1.27, well ahead of analyst estimates of 92 cents. Weighing in on the CRM stock is 5-star analyst Keith Weiss from Morgan Stanley. He says that their Q3 earnings report likely fell short for investors expecting a more robust growth rebound. However, he sees his core thesis around accelerating fiscal 2023 free cash flow growth as intact, given organic constant currency bookings growth near 20% and margin expansion potential, leading him to keep an overweight rating. Now, Salesforce has no shortage of analyst ratings. There are 31 current ratings, and it does come in as a strong buy based on 27 buys and just 4 holds. The average price target for the CRM stock comes in at about $336. That would be a growth potential of 26%. Looking at our most recent ratings, on the low end, we do have a few buy ratings at the $315 price point, which would still be a growth potential of about 17.5%. On the high end, we do have a couple ratings at $375. That would be a growth potential of almost 40%. And third on our list today, we have MKS Instruments. Their stock trades under the ticker MKSI, currently priced at $159 per share. MKS is a global provider of instruments, systems, subsystems, and process control solutions. These measure, monitor, deliver, analyze, power, and control critical parameters of advanced manufacturing processes to improve process performance and productivity for their customers. Their primary served markets include semiconductor, industrial technologies, life and health sciences, research, and defense. Founded in Massachusetts back in 1961, the company now has over 5,800 employees. Those include over 1,000 engineers and scientists, and they have over 2,100 patents. In 2020, they saw sales of $2.3 billion. Their size, reach, technical expertise, and operational execution gives them a unique advantage to provide solutions in the latest emerging tech trends, such as artificial intelligence and smart cars. Between 2015 to 2021, they've seen a compound annual growth rate of 24% for their total revenue and a 31% increase in their non-GAAP diluted earnings per share. Their third quarter results came out on October 27th. They had revenue of $742 million, which was up 26% year over year, and non-GAAP net earnings of $155 million, up 45%. MKS Instruments has 7 total current ratings, and they all come in with a unanimous buy. The average price target comes in at $230. That would be a growth potential of over 44%. On the low end, we do have a buy rating from yesterday that comes in with an upside of 18%. On the high end, we do have an older price target from 3 months ago, which would be a growth potential of 77%. So there we have 3 strong buy stocks, all with some pretty attractive upside potential from some pretty high-rated analysts. Now, you guys know I always love hearing from you guys, so let me know your thoughts on these companies in the comments down below. Were they on your radar already, or are these new names to you, and what do you think of their stock's future growth potential? Now, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.